The recently revised power tariff rates in Karnataka came as a shock to the industry and households alike. Electricity prices across the state increased by 2.8 rupees per unit for those using more than 200 units per month. For the households, Karnataka had announced free electricity till 200 units of consumption per month. But the industry and trade bodies of Karnataka are feeling the heat of this power tariff hike. Industries across the state complained of electricity bills going up from 30 to 70% for the month of June and demanded the government to reconsider the tariff hike. One of the contributing factors to the higher tariff for industries is the cross-subsidy. The National Tariff Policy 2016 prescribes cross-subsidy among various segments of electricity consumers, which raises the power tariff for industries and businesses. The National Tariff Policy has limited the maximum cross-subsidy to 20% of the average cost of supply. So the discount that households get is compensated by charging commercial users slightly higher than the cost of supply. Anne Joseph from Prayas Energy Group said that industry consumers pay less cross-subsidy than commercial consumers, and the problem that industry consumers are facing is originally coming from other sources.
The role of cross-subsidy in looking at compensating the discoms for the expenses is not as significant as subsidy. So then, what is really paining the industry? I think the issue itself is that what it costs the utility to supply power itself is at about 8 rupees per unit in most states. Obviously, over the years, reliability and other services provided by the utility have also increased. But at the same time, this is also the period when renewable energy and other power is available at competitive rates through third-party contracts or through markets. So as compared to the utility, many consumers can avail much more competitive supply through other arrangements, through alternate arrangements. So the cost of supply itself is non-competitive as compared to other avenues, and that is what is really hurting industry. The fact that they're unable to avail this competitive supply because of procedural hassles or because of lack of clarity, or because those are the kind of things that really need to be addressed.
Compared to captive and open access options, the cost of power from distribution companies is high and non-competitive. This has been driving industrial consumers away from state-owned distributors and pursuing options like open access and captive power plant facilities.
If you look at in some of these large states, the industrial tariffs have now crossed the 8 rupee, 9 rupee mark, and commercial tariffs are upwards of 9, 10 rupees. So that definitely hurts the cost of production of these industries, and that is why we are seeing a lot of these industries adopting renewable energy through open access, where you'll be able to get a cheaper source of power even after paying all the open access charges, because of the significant improvement in the competitiveness of the tariff offered by the wind and solar projects. A lot of industries are moving towards this open access and moving a portion of their power procurement to this. This enables them to meet their, obviously, the ESG obligations as well as reduce their cost of power procurement. That has been a challenge for the industry in many states.
Experts say DISCOMs should introduce reforms in planning and procurement and unbundle the tariff rates for services like wires and energy transfer ecosystem.
We move away from this conversation of cross-subsidy to a conversation of how do we increase competition and alternate supply options for consumers, and how do we really unbundle or rethink tariff structures for utilities itself, such that many of the services that we are providing to these consumers can be charged at cost.
It is also important to use innovation and bring in renewable energy resources to reduce the dependence on cross-subsidy for the poor and government subsidy for the distributors.
I think essentially we need to first look at what are the different innovative ways in which we can reduce the cost of the utility or the distribution company supply itself in the first place. So some innovative measures are being tried in states. For example, agriculture is the category which benefits a lot from, let's say, the cross-subsidy revenue that's coming from other categories and also from government subsidy. But recently there have been initiatives to reduce the cost of supply to agricultural consumers. So actually, solarizing many of the agricultural supply would reduce the cost significantly. In fact, it would even halve it in many states, which would reduce the cross-subsidy dependence and the subsidy dependence significantly. So leveraging on new technologies, can we think of measures to reduce the cost itself and therefore reduce the cross-subsidy requirement?
Industries and commercial users have been facing issues of higher tariff rates because of cross-subsidies and rising supply cost. Experts point at the need to deploy innovative measures to bring down power tariffs, and that means moving to affordable sources of electricity like renewables for the major power discoms in India.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.